Bitcoin is digital money. You can't hold it in your hand like a dollar bill. It lives on the internet. It was created back in 2009 by a mysterious person named Satoshi Nakamoto. No one knows who that really is. Think of it like a global currency that no single bank or government controls. This idea is a very big deal. It means you can send money to anyone, anywhere in the world, without needing a middleman like a bank. This decentralization is the core magic of Bitcoin. Many people see it as the future of finance, a new way to store value, a new way to transfer value. So why does everyone talk about its price? Because it changes. A lot. One day it's up, the next it's down. This is called volatility. This volatility is what gets people excited. Some people buy Bitcoin hoping its value will go way up, making them rich. They see it as an investment like buying a stock or buying a piece of real estate. Others see it as a hedge against inflation. When regular money, like the US dollar, loses its buying power over time, they hope Bitcoin will hold or increase its value, protecting their wealth from slowly eroding away. The big question on everyone's mind, especially as we stand here on September 21st, 2025, is simple. What's next? To understand where we might be going, we have to look at where we've been. The past year for Bitcoin has been anything but boring. It has been a classic story of ups and downs. We started the year with a lot of optimism. The market was recovering from a previous downturn, and many believed the worst was behind us. New money was flowing in. Headlines were filled with positive news about wider adoption. Major financial institutions were announcing plans to offer crypto services to their clients. Then came the Bitcoin halving event. It took place in early 2024. The halving cuts the reward for mining new Bitcoins in half. That reduces the supply of new coins entering the market. Historically, the year after a halving has been very bullish. As 2024 progressed into 2025, the market filled with anticipation. Many investors were buying in, expecting history to repeat and for price to climb toward a new all-time high, but the ride wasn't smooth. We saw significant dips, often triggered by concerns about government regulation, by macroeconomic shifts, and by changes in interest rates. When big economies get nervous, investors sell riskier assets, and Bitcoin often tops that list. Now for the part you've been waiting for. Where do the experts think Bitcoin's price is headed? Let's break down the predictions for right now, September 2025, and for Q4. It's important to remember that these are just predictions. No one has a perfect crystal ball. The experts look at data, historical trends, market sentiment to make their best guess. Opinions are divided, with some being incredibly optimistic and others being more cautious. Let's start with the bulls, the optimists. Many bullish analysts believe that September will be a launchpad for a massive Q4 rally. For this month, they see the price consolidating, or trading sideways, in a range between $110,000 and $130,000. They believe this is the calm before the storm. For Q4, their predictions get really exciting. Analysts from firms like ARK Invest, led by Cathie Wood, have long-term targets that suggest we could see prices push towards $150,000 or even $180,000 by the end of December. Their reasoning is tied directly to the post-halving cycle and increasing demand from big institutional investors who are now more comfortable with Bitcoin. On the other side, you have the more cautious analysts, or the bears. They look at the global economy, rising interest rates, and the threat of stricter regulations. For September, they predict a potential pullback, with prices possibly dipping below $100,000. Understanding the price predictions is one thing, but honestly, understanding why the price moves is even more important. There are a few key forces that push and pull on Bitcoin's value. Bitcoin halving, institutional demand, and global regulation. The biggest driver everyone is talking about in 2025 is the Bitcoin halving. As we discussed, the halving in 2024 cut the supply of new Bitcoins. It's simple economics. If demand for an asset stays the same or goes up, but the supply of new units goes down, the price should rise. Historically, the 12 to 18 months after a halving are when Bitcoin sees its most explosive growth, and we are right in that window. Another massive factor is demand, especially from big players, hedge funds, pension funds, large corporations. In the past, Bitcoin was mostly for individuals. Now, major companies are buying Bitcoin to hold on their balance sheets. With the approval of Bitcoin ETFs in recent years, it has become incredibly easy for traditional investors to get exposure without having to buy and store it themselves. This flood of big money creates huge buying pressure, which can send the price soaring higher and faster than ever before. Of course, not all drivers are positive. Regulation is the big wild card. If all this talk about exploding prices has you thinking about buying your first piece of Bitcoin, it's important to pause and take a breath. The most important rule in crypto is to be careful. The possibility of high rewards comes with very high risks. The price can drop just as fast as it can rise, and many people who rush in without a plan end up losing money. So the first tip is simple. Never invest more than you are willing to lose. Think of it as money you could take to Las Vegas. You hope to win, but you have to be okay if you walk away with nothing. The second key tip is to do your own research. Don't just listen to some guy on YouTube, not even me. Don't buy Bitcoin just because your friend said it's going to the moon. Take the time to understand what you are buying. Read about what Bitcoin is. Read about the technology behind it. Read about the risks involved. The more you know, the less likely you are to make emotional decisions. Panic selling when the price dips. FOMO, fear of missing out, buying at the peak of a rally are the two biggest mistakes new investors make. Knowledge is your best defense against both. A popular strategy for beginners is called dollar cost averaging, or DCA. Instead of trying to time the market and invest a huge lump sum at the perfect moment, which is nearly impossible, you invest a smaller, fixed amount of money on a regular schedule. For example, you might decide to buy $50 worth of Bitcoin every Friday, no matter what the price is. This strategy helps smooth out the volatility. And remember that in the world of crypto, it's a marathon, not a sprint.